Boom! So boys, as you saw, I just received the payout from Rebels Funding, and I also moved to my new crib here in Prague, Czech Republic. As soon as I moved in, I made 1.5k on GBP. So in this video, I'm gonna be breaking that trade down. Let's go into it. So boys, when it comes to the trade, that position on GBP JPY and how and why I took this trade, it is really simple. So let me remove the drawing for you boys and listen. How I trade is 3 simple steps. It is bias, it is key levels, and it is market structure shift on the lower time frames. So, first step is bias. Where do I want to trade? Do I want to trade long or do I want to trade short? Simple. Market can only move up or sideways or down. There is nothing else what market can do. So basically, how am I identifying my direction, my bias? It's based on H4 time frame and H4 and daily time frame. So basically, if I go on a daily time frame, you can see that market is creating series of higher highs and higher lows, higher highs and higher lows, which means we are trending bullish, right? If I go on H4, it's the same thing. Higher highs and potentially higher lows, which means market is trending bullish, which means first of all, I want to buy. Okay, second of all, also with this direction, I like to mark out my swing high and swing low. So in this case, this is my swing low, this is my swing high, right? Why is that? Because when we broke this structure to the upside, right now we made a pullback. So this was the broken structure to the upside. This is a new high. This is a low because this was the previous higher low point. So right now, this is potentially higher low point, but this becomes higher low point once we break this high. So currently we are at like a next leg phase to the upside. So yeah, the trade was taken right here, and it was closed somewhere along these highs right here. So I know I want to buy, right? Now, where do I want to buy? Key levels. So key levels are areas of interest, point of interest, call it whatever you want, where price reacted in the past, or previous market structure high and previous market structure low. So as you saw, boys, price dropped down heavy, made a pullback, dropped down again, made a equal lows, which is also a double bottom pattern, then break this double bottom pattern, right? So all this becomes my key level. This key level is really huge, but I always mark out the bodies and the wicks. So the key level is not specific price, the key level is a zone. It's always a zone, right? So I saw price rejecting this key level once, twice, then price broke above these highs, which means broken structure again, and they then came down all the way down to this key level yet again. But we didn't break that key level because we stopped at these highs, at these lows, excuse me. If I would draw it like this, that would be like, hey, maybe we broke it. But since I'm drawing bodies and wicks, we never ever break it. So I know I'm bullish and I'm currently trading at my key level, right? So I zoomed on H1 time frame and what I saw was basically price came down to that key level, made a lower high point, came down again, made equal lows again on that key level. We are bullish. We broke it, we retested. I didn't enter here, unfortunately. I didn't get tagged in by few pips, but it is fine. And then we pull back up again. So where I entered my trade. So basically what I saw was price going higher from here, trending bullish on M30, M15, and basically on every single time frame. And I saw price retesting this key level right here. And why this is a key level? This is not like major key level, but this is an intraday key level. Major key levels based on H4 and daily I mark out as yellow, and intraday key levels on H1 and M30 I mark out as white. So I marked it out as white, and also I saw price respect it, break above, respect it again. So when price was right here, and price was failing to break this key level yet again. So what I did, I waited for some bullish momentum candlestick to print itself for me to be able to execute the trade. So I executed the trade somewhere right here, and I placed my stop loss. I didn't place it here because for me it was too risky. I placed it under the low because there was still opportunity that price would retest this structure on M30. So I placed the stop loss right here, and my original take profit was right here, was these highs, these lows right here for 2R. So I never closed it there, I closed it somewhere right here, and I'm gonna explain why. So as you know, and if you don't know, I'm gonna explain what I do right now. I like to scale into my positions. When I see price is playing in my favor, I like to scale into my positions. So when I saw price go up and break and retest these highs right here, boom, that is where I decided to take a scale in position, right? So price broke it, price retested it, and that is exactly where I entered. So this stop loss from 100 pips went down here to only 40 pips, which means if I was risking 1% on $80,000 account, Rebels funding account, I was risking $800, which means from 800, my risk is right now 350. So I can risk another 450 to be total 800. So I entered right here with the same stop loss, and that was the 450 position with a scale in. Risk was still total 800. Okay, but this position, when this first one went from 800 to 350, and now I had a 450 of open risk, so I risk 450 on another position with the same take profit. But you see, the risk reward is getting way bigger, way better, because I'm scaling in, and I'm always putting my stop loss under the lowest structure point, always under the lowest structure point. Let's say market is doing this, and my first entry is like this, okay? Let's say take profit here. So whenever price breaks this high right here, I know if price is gonna go down here, I'm most likely wrong and price is gonna continue down because we gonna break market structure, right? So whenever price breaks this high, okay, what I'm doing is that like I'm setting my stop loss under the lowest low. And what I'm doing, I'm waiting for a pullback, for price to pull back to some key level or previous market structure high, and I enter another position right here with the risk I have remained for me to risk. I risk on funded accounts, I risk 1%. On challenges, I risk 2 or 3, depends. But let's just say I risk here, I was risking 56 pips and the stop loss went to 8. So I have another open, let's say 0.8, 0.9% to risk with the same exact stop loss, and I can scale in multiple times, and I can catch the big move which I'm anticipating on daily and H4 time frame. Okay, so that was the second position on GBP JPY, and basically I also had marked out these highs right here. Why I had it marked out? Because as you can see, price respected the highs here, here, and here. So it was another key level for me. So when I saw price break that key level right here, and then price broke slightly under. Remember, this was my TP. But price broke slightly under. I was like, okay, there is a possibility we might have a bigger pullback, which eventually ended up happening. But price broke market structure right here. On M30 you can see it way more clear. Price broke market structure right here to the downside on a lower time frames, which means we are probably gonna have some pullback, right? Because I know I'm still bullish, and in this case price broke market structure again when we broke above here. So this is my swing low, this is my swing high. I mean internal, because this is still swing high and swing low. So this is my internal low and internal high. So what I'm anticipating is something like this, okay? But when you see on these highs or somewhere price breaking market structure on the lower time frames, it probably means we're gonna have the pullback on the bigger time frames. So I saw price broke the market structure and then price was ranging in this key level, kinda under, yeah, it was kinda 50-50. And then when price was like ranging, I was like, cool, listen, it's my payout day today. It was my payout day today. I was 1% in drawdown, and as I said, I made 1.5k. I'm gonna share the screens right there, and it put me around $900, which I was able to withdraw 700. I was 1% in drawdown. I took a loss on GJ earlier, but yeah, when I saw price was ranging right here, and I also knew it was my payout day, I decided to close the trade somewhere right here at this intraday resistance, because I was like, cool, price break this level, there is a possibility for a pullback. I'm gonna withdraw the payout now and I can enter the trade again tomorrow, which is my idea for today, right? Because yesterday I withdrew the payout. So basically that is the trades. Direction on daily and H4 time frame, key levels on H4 and daily time frame where price reacted the most in the past, and intraday key levels based on H1 time frame. I don't go lower, I don't go M30, I go H1 lower, which is this. I took first trade off of it, and the second trade was basically break and retest on this lower time frame structure shift. And as I said, I closed the trade right here, mostly because of my payout day and because of the lower time frame structure shift. So what I'm anticipating right now on GJ, let me remove everything right here. So basically I'm anticipating on GJ to go higher again, because right now we made significant enough pullback. It is already 38.20 if I'm not mistaken. It is 38.20, so there is a possibility we will go here or either here to the swing high. But yeah, that was the trade, boys. As I said, if you have any questions, just type it below. I'm gonna answer it. But that is so simple process. It is direction on higher time frames, H4 daily. It is key levels on H4 daily based on the previous market structure or based on reactions from the past. And then there is market structure shift, which happened right here. And yeah, that was the trade. And I'm gonna show you right now the process, how I withdrew the payout, how I requested the payout, and how fast it all was. So boys, it is already the next day, and as you can see, the payout has been completed. And yeah, as you can see, it is $700. 931 was the equity. The profit split is 75% for the first payout, then it increases to 80 and 90%, which is really nice. And yeah, I received the money basically in 8 hours with Rebels funding, which is amazing. And yeah, I'm looking forward to continue trading with them 1000%. As I said, I have new fresh 80,000 account, as you can see right here, the balance 80k. And yeah, so basically Rebels funding really well. The payout was fast, so everything was met. I think there is nothing to be scared of. So yeah, this firm has been really good so far. And if you boys like to trade with this firm as well, down in the description is gonna be discount code for 30% on your first purchase with Rebels funding. And if you are already trading with them, don't worry, because there is also a discount code for 12% discount for every account. And that's gonna be it for this video, boys. So if you like this type of videos, let me know down in the comments. As I said, if you got any type of questions, ask me down in the comments, and I'm gonna see you boys in the next one.